Welcome to On the Chain. This is Jeff here with co-host Chip over here. And we've got a great special guest with us today, Mark. Down here, right down below. We are really happy to have you back. You were on with us before, and I know we had a great conversation then. We're going to have a great conversation today. We're going to talk a little bit about all things crypto and blockchain. We might even touch about some of the things that are going on right now with XRP. It's all getting ready to start right now.
And now, the Roundtable with Jeff and Chip on the chain.
All right, welcome. This is great to have you guys on. Hey, before we get started, hopefully you guys have some coffee with you. Today is Segfredo Day. Yesterday was Death Wish. Today's Segfredo. And I made a mistake and I didn't take enough the first time around, and my wife already put milk in it. So now I'm drinking it. I don't normally drink it with milk, and it looks like tea.
Is there any coffee in there?
I don't know. Take a look at
My
that.
gosh, that is very light, Jeff. I'm shocked. That's not your
the
style.
darkest part about it is I think the bottom of the cup at this point. But but the Segfredo is great coffee. So I don't know if you guys like espresso, but if you don't start the morning out with espresso, I don't know how you start out the morning. So
I just go with coffee.
Yeah, I think too much. The phrase "too much caffeine" is an oxymoron.
Nice. What do you like? What do you usually get going in the morning with, Mark? What do you usually start off?
A couple of cups of regular coffee, just before anything else.
The drip brew, or the K-cup kind, or
K-cups, but I load them myself.
Yeah,
so,
you know what?
There you go.
I do too. I've got a couple different sealed, stuff.
Mm-hmm.
I like loading them up. I thought that would be a pain.
It's not.
I love it, man. I love loading them up myself. I even found a little tool on Amazon, a metal tool that does the perfect proportion.
Yep.
I just do the grind and brew in the espresso pot. But I should probably make a note, since we're actually airing live right now. It's evening. It's not really morning. So.
Yeah. At the time of taping is what they usually say, Jeff.
I'm drinking this in the evening. I'm drinking
Coffee's
this.
Not just for breakfast.
That's right.
A day drink.
That's right. You can drink espresso whenever you want.
That's right.
So let's dive in. It's been interesting. I mean, we start seeing a lot of movement. It seems, it seems like something kicked off, something awoke in the industry when we had the comptroller putting out and allowing the banks to custody crypto. Brian Brooks put this out, and all of a sudden things seem to be moving at a breakneck speed. Mark, what's your take on what's happening right now?
I think there's a lot of things that are happening. Maybe some impatience in the crypto community, or it certainly looks that way on Twitter. If you read, I think people saw Brian Brooks' comment and the letter and expected instant price spikes, and that's just not the way it happens. But in terms of, do what?
No, nothing going.
But in terms of, this us waiting as a community on regulatory clarity, and certainly the industry waiting, and not just the crypto industry, the entire finance industry in the U.S. waiting on some kind of regulatory clarity. I think that the Brian Brooks pronouncement was a watershed moment, and the promise that there would be a framework for the industry coming out, I think by the end of the year. That's huge. So, if you're expecting to see price spikes the next day, that's probably not realistic.
Good luck.
Yeah, exactly. Or if you see them, they're not real, and they're not going to hold. It's just a fun.
But in that case, Mark, I would think that's more reactionary, right? That's the speculators, the traders. They're getting in, they're getting out. The market's going up. Then you're going to see the pullback, right? I mean, that's not long-term viability.
That's not the long term. It's not the real. I mean, somebody can make money on it if they're trading. It's not me. But if somebody's anticipating a spike and looking to make a little bit of margin here and there, that's a good opportunity. I think for me, the real tell is as the big investment houses and financial advisory firms and custody firms start to roll out their marketing materials and start to pitch to the individual financial investors and start to make it clear how the products that they're putting together are going to work and how they'll be offered to their customers, to their clients. I think that's where we start to see the real ramp up. And we're starting to see little bits and pieces of that come out now. Grayscale has started putting things out on the street.
That's right.
Started talking about taking some of the individual funds and making them separate SEC governed companies or separate entities, bringing some of them onshore. You couldn't invest in their XRP fund because it was offshore. And so if they're going to bring them under the SEC umbrella, then they come back and all of a sudden are available to institutional investors. I think that's where we start to see the real sustained growth. What do you think?
Chip, what are your thoughts on that one?
Yeah, I definitely think that I feel like there's definitely something kind of brewing, and I think that a lot of it's going to hinge on I think the regulatory and clarity, like the uncertainty right now that's happening. I think everything's just held back by like November 3rd, this election that's coming up in the US. I feel like everything's hinging on it, right? And there's a lot of stuff that's happening, like moves being made, let's just put it that way, by different entities and groups. Everybody's jockeying for some sort of a position, right? But everything kind of comes down to, it's almost like everything hinges on that, just because it gives people, hey, are we going to go this direction in the next 4 years? We're going to go a different direction in the next 4 years, so people are kind of left wondering. So I feel like that no matter what we want to happen, I think a lot of it hinges on that. So I think people are hurry up and let's get that over, and then let's start looking at the next phases to see what's possible. That's just my thought. I always feel like no matter what kind of great things that are happening, like you said, yeah, we wish that it was happening faster, it was happening quicker. But I do feel like, we've seen a lot of great things happen in the market over the last couple of weeks. We saw Zap go from 0.02 up to 18 cents. We saw Chainlink. It's gone all the way up to $12 and change. So you're starting to see some of these alt projects. Everything used to be tied directly to Bitcoin, and so now you're starting to see some of this sort of unbinding, if you will. It's kind of they're moving in different fashions. And then there's the XRP, and we're stable at right around 29.30, right? We're at that stable. So I don't know,
it's
Jeff.
the best stable coin that exists. I mean, that's the whole point. You don't have a lot of volatility in it at this point. So it's moving, and I think that to me is a good thing. You don't want big wide swings. What's happening with Link right now, we don't know what the downside is. And so one of the thing, Mark, you just brought that up, is that you're going to have these initial ramp up spikes, but then they're going to come back down again. It's going to level out until it really gets the traction, and through some of the regulatory clarity, through some of the projects that we're anticipating that have real practical use case. We don't necessarily want a repeat of 2007, 2018, because of the fact that it was a fast ramp up and it was a pretty fast drop off, but then it was gradual after that. But yeah, to me, I'd rather have kind of slow, steady, continuous increase with little increased spikes, not big, massive, ramp ups, so I think it's healthier. It's a healthier market, overall. So I guess I try to always do a comparison with a stocks that have those massive volume spikes. There's always a massive drop off. And the one thing that people always forget about, and I think we're seeing it, people celebrating their gains on Link, or, when you're trading the market, you trade the market, and that's okay, because some people make money day trading. Most people are going to lose. You're never going to be able to gauge the market. You never know where the bottom is. You never know where the top is. If you go into your trades a little more strategically, so you know what your potential loss is, and you know where your potential sell point is, you're a lot more organized in it. But most people that trade don't understand what their loss is going to be. They don't project it ahead of time. They don't factor it in, and they don't really know where the sell point is. But everyone's trying to buy low, sell at the height, and it gets dangerous, you know. And so the fact that they always leave out is that for everybody that has a gain, there's an equal person out there that has a potential loss, because we're not buying and selling against AI. We're buying and selling a market that is other people buying and selling. So if I buy at 10 and sell at 30, that means somebody else bought at 30.
Yep.
And so when the market retracts back to 10, I mean, that's good from the person trading. But the FOMO, the excitement, the YouTube videos that keep talking about, oh, is Link going to go to 20? Is it going to go to 200? Is it going to go to 400? Those guys are feeding the market negatively. And, you know, I'm getting a little fed up with that FOMO cycle, because I think it's very, very negative. It's bad for the space. It's bad from a regulatory perspective. And when the SEC decides to start turning their attention to those YouTubers that are hyping the market, I think one of the, you know, groups, because they used to do this in penny stocks, and it's illegal. It's not legal to hype and FOMO the market and try to trigger, you know, a boost in volume and a boost in price in order to bail, you know. And so what we saw a few weeks ago with Dogecoin is that on Twitter they said, let's everybody buy in and see how high we can get the price point. Well, that doesn't make any sense. And when the SEC starts investigating those Twitter feeds and they see it as a concerted effort to boost the price to bail, to have someone else stuck with the bag, guess who gets in trouble? You know, but then it reflects poorly on the market. Those same YouTubers that are in this space right now, they keep hyping this space. It's getting really aggravating, and it's aggravating to me right now because of the fact that a lot of new people in this space are watching those videos. And I think that we have an obligation, if we're going to put out YouTube videos, stay within the confines of what's legitimate, you know. And if, you know, granted, there's a little bit of clickbait, you want to draw somebody in, but don't hype the space. Can it go to 20? Can it go to 200? What's the next stopping point? How high is it going to go? Okay, well, now you just contributed to this fact that when there's a little regulatory clarity, when the SEC looks in, they're going to look across the board and say, you guys are the ones that are guilty of pushing the fervor that's led to the FOMO to get people to buy in, to get those mainstream or, you know, new retail investors to get stuck with the bag, to push it high. Because again, you know, like we're saying, if you sell it 20 and it drops back down to 10, you just stuck some people with the bag, but you participated in that artificial ramp up to 20. What are your thoughts on that, Mark?
Yeah, I think you're absolutely right, Jeff. I think that's one of the other things that's going to come out of this regulatory clarity is we'll have rules about what's allowable and what's not allowable in terms of promotion, self-dealing, and all that. That right now you can do perfectly legally. Might not be moral or ethical, but it's legal within the crypto space. And if you were talking about equities, you'd be going to jail or certainly going to court if you tried the same thing, that same kind of manipulation. I think the people that are doing this in a big organized way understand that big party they're having is coming to an end as soon as the regulations come out and start to be enforceable. So this opportunity to create that froth and make some money on the margin, the more of these altcoins they can pump up, cash out of, and then rinse and repeat across the market. I think we're going to see more and more of that the closer we get to having that clarity, because the clarity, I think, is going to flush out a lot of that activity because it will then be illegal. I think it's going to flush out a lot. Brad Garlinghouse has talked about 90+% before of the different projects going away just because they don't have any good use case or business case other than making the creator a lot of money before they walk away.
And that's amazing to me, Mark. You know, that point, you know, let's touch on that point a little bit because, you know, Chip and I have talked about this a lot. You know, these projects that come out of nowhere, you know, there's projects that are solving problems and there's, you know, then there's projects that are in search of problems. And we see a lot of those projects that are in search of problems, like you said, that are purely there to enrich. They're making money out of thin air in that case because they don't really have anything connected to it. I mean, you could say that and make a claim across the whole space, but that's not accurate. But a project just to launch a token for the token's sake, again, there's a limited window of opportunity for those people to make money until, but it muddies the water a little bit, right?
Oh, it absolutely does. And the risk is that it gives the entire sector a bad name. So, Bitcoin was for years associated with illicit activity, Silk Road, illegal drugs, illegal weapons, financing terrorism, all that. The reality, even then, was that most of that activity happens with cash. It's not happening with Bitcoin. It's probably happening even less with Bitcoin. And the more the market gets regulated, the more clarity there is, the more enforcement mechanisms there are, the more transparency there is with law enforcement, and the more integrated it is with the traditional financial system, the less of that we're likely to have, and the more perceived legitimacy, I think the crypto market is going to have. And that is a really good thing for all of the legitimate companies like Ripple and some other ones that are solving real business problems for real organizations. That's value. So, I think this is a transitory period that we're going to move through. That going back to what Chip had said, I think it feels like, there's a lot of anecdotal evidence and there's just gut feel that feels like we're leading up to something that will be, I think, a seismic shift. I think we will look back on it and go, even though we've been watching it build up for years, for most people, it will be sort of like a flash of lightning. Where did that come from? How did it happen so fast? Why didn't I see this coming? And I think it feels to me, and I might be wrong, but it feels like it's going to be at the intersection of the election, this health crisis that is, the world is dealing with, and the U.S. is in particular struggling with the financial crisis. All of that stuff comes to a head about the same time. And I think, if nothing else, the election becomes a forcing function for that. Sort of a catalyst for some kind of action. And so these set pieces that are getting put in place, like the OCC ruling and the framework that's going to come out, and if Judy Shelton goes on to the Fed and does what we think she's going to do, all of those things, all the organizational partnerships that have been established across the industry, all of those come into play at the same time. And so, even though it will come out of nowhere for most people, just because mainstream media hasn't been paying attention to it, and most people, it's not been in the headlines, so most people don't see it coming. For those of us who have been watching it for years, we'll be like, finally, it finally happened, But for most people, it will be like just, out of left field. They just absolutely won't see it coming.
Yeah, Chip, what are your thoughts on that?
Well, it's interesting because, I don't know if you guys saw this story, but the New York State Department of Financial Services, they came out with this green list. So they pre-approved these 10 cryptocurrencies, and it was kind of a weird list, but I noticed that XRP was on the list for custody. However, it wasn't on the list to be, it wasn't to be listed. So I thought that was kind of an odd sort of a pairing. And there's weird stuff like Paxos Standard is on that list, Pax Gold, Litecoin, the ones you'd expect, like Ethereum Classic, Ethereum, Gemini Dollar was on it. But the whole idea is they left off Paxos with Ripple. They call it Ripple, but it's XRP, right? So I don't understand why it's okay to custody it. And so one of the, I guess, the biggest cogs in the wheel has been our legislative. When you look at New York State, right? So I know people, when the XRP tip bot went away, like panic ensued, because you live in New York. It's like you can only use one or two exchanges. Like, they're very, very tight with the regulations in New York. And now they come out with this list. So you're starting to see a little bit what you're talking about, Mark, is that some clarity is starting to come forward. And even though it might not have been what people expected, but hey, look, at least it's happening, and they're starting to green light some of these, cryptocurrencies. More will follow. So I do feel like, when I saw that, I was like, wow, it's kind of weird. Like, you talk about the set piece. I'm a big fan of soccer. I love set pieces. It's like everything kind of, you put it in you kind of move it into motion and order, and it's like boom, some things start happening. So when I saw that, and New York, is slow to move. They're always rethinking everything and looking over everything. So I think that when I start seeing that happen, finally it's going to be really good for not only the industry as a whole, but it's kind of like the canary in a coal mine, right? It's kind of telling you that, okay, everyone's looking at this. There's all kinds of chatter. There's something in the air. There's this, it's an ambiance. It's a heaviness of sorts. And I think that, like you said, Mark, the ones of the people that have been thinking about this for some time, or at least watching it, we kind of feel like there's a little bit of a shift happening, and in this whole area.
So I totally agree with you. For a long time, the Ripple guys, for years now, the Ripple guys have used this metaphor of crawl, walk, run, right? That basically we're going to get a couple of small partners, and we'll get a little bit of adoption going and a little bit of volume, and then it just will sort of incrementally build over time. I think that's easy for people to understand, and I think that might have been one of the original strategy concepts, but it feels to me like that metaphor doesn't work anymore. Where I think they're going now is that it's, instead of crawl, walk, run in this kind of evolutionary, steady growth kind of thing, I think it's more like we're getting ready for a track race. And what do? You don't immediately walk out on the track and get in the starting blocks. You go out and you warm up and you stretch, you limber up, you get your joints loose. You might do a couple of jogging laps to get the muscles warmed up and all that. Then you get up into the starting blocks and you get down in position. The starter says, "Runners, take your marks," and then fires the gun, right? But you don't do it cold. You don't do it without warming up and all that. I think that's what they've been doing, is getting ready to go. And in Ripple's case, it's getting some clarity. And so back to New York, it's having the ability for the big Wall Street firms to at least custody is a major deal. Getting the partnerships lined up, getting the international corridors lined up and tested. Because you've seen for several years now, we've seen these spikes in transactions on some of these corridors, and then the spikes shut off. Well, that's not organic growth, or it would be maintained, or the partnership would go away. If the partner tested it and said, "Yeah, it's not working for us," they'd walk and you'd see nothing probably. But the fact that it spikes up, goes for several days, and then turns off would indicate to me that they're testing a system. They test it, they go, "Yeah, it works, we're good." They turn it off until they're ready to go live. Just last week, somebody played a video on one of the YouTube channels that was a quote from, I think, one of the senior people at DTCC, who was talking about lighting up all the corridors at the same time. Well, you can only do that if you've tested them. I mean,
that's right.
Chip, from firsthand experience how conservative the financial industry is, especially when governments and central banks are involved. They're not going to roll something out that's not thoroughly tested and vetted. So if they're going to make this shift, and this might go to the resetting the playing field discussion, they're going to want to make sure that whatever they're relying on works. It's not going to be, let's switch it on and see what happens and hope it doesn't crash, because Murphy's Law will say, yeah, it's going to crash when you need it most. So they're going to test it. They're going to try it out, and they're going to turn it off until they're ready to go. And I think we've seen all of those pieces being put into place. So maybe these last few, the regulatory clarity, the pronouncements out of OCC, the pronouncements out of New York State, I think those might be some of the last ones that get put into place. And then when they're ready to go, we go. So that's not going to apply across the board to all cryptos. I think that's going to be XRP specific. I think that's where we're going to see the decoupling from XRP price following Bitcoin price, because they're moving not on the FOMO or swing trading among small retail investors. Will be moving then on institutional adoption and use. And so that's when we see the growth that goes up and up and up. It might not be, parabolic. It might be. That'd be nice.
That would be nice.
I would not complain. But, it might just be significant growth that's sustained. And back to Jeff's earlier point about not wanting to have the valuation swing wildly up and down. You can have something that essentially acts as a stable coin that continues to appreciate in value. The issue is that it's not going through these wild gyrations in that value. So if you're an institutional user, you don't want it. You don't want to be holding big bags of something that's losing 30% daily or gaining 30% daily, because the downside of that is it's going to reverse and go the other direction. You want some of that consistency and predictability in what it's valued at. And if you go back and read some of the strategy documents that Ripple has let out over the years, they very clearly are depending on the institutional users. It's not us. It's the institutions, whether they're big banks, Wall Street, or government. And so they want that stability. They want that sort of predictability of what's going to happen with the value of the tokens that they're holding and the stability and utility of the system. So that's how I see it. How about you?
So this is interesting. I mean, as you brought this up, I had to pull this article up because I think it's really, really important. As you're mentioning, all these things are kind of coming to a head. The one thing that we seem to forget about, and there's been a lot of talk from a government level, as far as the speed at which payments can be sent, and it was highlighted significantly, with this latest stimulus push to get money into the hands of people. When they did the CARES Act or whatever it was, and they wanted to push money out, it could go through the traditional kind of ACH type scenario, which even coming from the government's going to take 3 to 5 days. They could send out paper checks. A lot of people didn't get them. Mail is notorious for losing things. The documentation and the tracking mechanism of pushing money into people's hands didn't necessarily work efficiently. And this was from a stimulus perspective, government giving out money, which needs to be kind of one-time, short-term, short-lived. But it brought up a lot of discussion to the digital dollar. How do we get money into people's hands? Reflect back, because here we're all sitting back and saying, well, digital asset, right? It makes sense. RippleNet, ODL, 2 to 4 second transfers, transparency, easy tracking, et cetera, et cetera. It can be efficient. So here you bring, the culmination of all these things coming together. FedNow, right? So FedNow has been in play since 2013. So now we're talking about 7 years in development for FedNow. Incidentally, with Ripple and all of that, 2012, came out a year before that, Bitcoin a few years before that. All of these things are culminating towards the same direction, right? And so FedNow is interesting because FedNow incorporates all of the ideas that we're talking about, right? And it's interesting because there was an article that just came out in Forbes. What was the date? On the 7th, so 2 days ago. It came out, and they're talking about the fact that it launched. It's taken 7 years. You have the board of governors. They have to kind of get on board with this. The fact that there's 12 reserve banks around the U.S. that are going to have to oversee it. All of these ideas. And one of the questions that they even brought up in the article was, if FedNow were operational, would stimulus checks have reached its recipients faster? So that kind of that point. Then they get into, well, FedNow is going to be 24/7, 365 days a year. There's not going to be anything stopping it. Then they talk about the FedNow, the acronym RTGS, which is real-time gross settlement. What do we know about Ripple? Real-time settlement, going through the ODL. So all of these, aspects here, they're talking about that they're going to be using reserve bank accounts. Interesting. Now banks can custody digital asset. Why would they approve for banks to custody digital asset if it wasn't for FedNow needing to use some form of a digital asset to move through their federal federal banks. It brings up to what you're talking about, the culmination of events. We'll see if it happens, but it is interesting as you see these, timelines pick up. Then you get into it. What is it? He brings up, what does this mean for ordinary people? Chip and I have talked about this a lot. Ordinary people don't care what, and how things function in the back end. They don't care about Ripple. They don't care about XRP. They don't care about Ethereum. They don't care. They just want to know that their money gets from their bank account to somebody else, from somebody else to their bank account. They want to know it's there, it's efficient. I got my money. You bought something from my store. I get instant settlement. Your money transfers over to me. It allows me to be more liquid. It allows me to pay my vendors, quicker, and I can pay them immediate. They can manufacture. The whole process works more efficiently. Then you get into one of the things they talk about for FedNow, liquidity. They say one of the side effects of gross settlement, which we're talking about, is increased liquidity demand. Due to the fact that some debits may hit, quoting here, due to the fact that some debits may hit the reserve account much before the credits. So here it says, in fact, the liquidity needs of gross settlement system for banks who sit at the heart of the financial system can be as much as 100 times as needed in a net settlement system. They go on to say a liquidity management tool, which is part of FedNow's core, is meant to support each other using credit provided by banks with reserve accounts. Then they get into the retail aspect. And this is where you start seeing maybe some of the potential limitation of the FedNow on a retail side, because they're limiting the transactions to $25,000. So if I want to go buy my house, I want to give you, $500,000 here. You can't use the FedNow system. We got to go a different mechanism, which will be in place because now through OCC, banks can custody. It's opening up a whole new venue, maybe not tomorrow, maybe a year, 2, 3 years from now, who knows? Then they get into talking about ISO 20022, 20022. And they, kind of mention what the importance of that is. Incidentally, Ripple now, working within that ISO, criteria. And they talk about what is it? Well, now it's the standard. It's the standard for messaging, standard for communication. They even mention in this article interoperability. But here it says interoperability is going to be a challenge using this model. Encryption and compression standards for XML are in a bit of a ferment. Encryption and compression are very important for implementing a payment system infrastructure that needs to support hundreds of thousands of transactions per second in a secure national and supranational payment system. Then they get in the article, they talk about Libra. They talk about the DCEP, which is the Chinese central bank digital currency. So it's really, really interesting, to see the culmination of all of this. All of these trigger keywords is everything we've been talking about. And like you said, most people, they have no clue about this. And all of a sudden, November, December, a year from now, whenever it is, everything turns on and people are like, whoa, where'd that come from?
Yeah, absolutely.
Right.
So if you think about this from and I'm a government employee, but I'm not representing the government here. So if you think about this from the perspective of how government normally does business, when they go out to write a contract, and government usually doesn't create things, they usually will leverage something that either already exists or they're contracting with a private sector company to create. When they do that, they write these contracts that have specifications for meeting certain criteria to solve a particular problem that they can't do themselves. And so if you look at all of the things that you just described, those are all criteria to meet the ISO 2022 requirements, to make the real-time gross settlement system work, to abide by the custody, KYC, AML, all of that, counterterrorism, countering the finance of terrorism, all of those criteria, transparency, accessibility for law enforcement, all of that, those all get baked into a set of criteria to make this system work. There's one company that is already connected that already has been working with regulators for years and years and years from its inception. If you go back and listen to some of Greg Kidd's comments about their early work with the regulators at Ripple, that is already solving these problems, already has that capacity, already meets all of these criteria. There is this super close fit between government need to have a system that does all these things and Ripple and RippleNet and XRPL and its native token that does all of that. And so in my mind, it's sort of a slam dunk. We're just waiting on the deal to be signed and rolled out for the public. Now, I might be totally wrong. They might go a different way entirely. I don't know. But if you're on the government side and you're coming up against these deadlines, and some are real deadlines, some are self-imposed, like when the OCC said they're coming out with a framework for a certain amount of time. Some are externally imposed, like elections coming up, and others where you have like the ISO requirement, where SWIFT said they're going to kick their ability to meet those requirements several more years down the road. All of that leads up to a point where you got to go with your best option. And if your best option satisfies 100% or very close to 100% of your requirements, that seems kind of an obvious pick to me. So I've not seen anything, like I said, I might be wrong, but I've not seen anything up to this point in the last 3 years that would lead me to think that there's not this alignment happening behind the scenes, and that there's going to be a system that Ripple's going to be integrally involved, maybe not, certainly not the only player, but integrally involved in that system. And that if you're part of that, then you're going to do really well. That's what it feels like to me.
Yeah.
Now
Well,
that's Ripple, right?
yeah.
Sorry.
Let me just jump in here real quick.
Yeah,
So from a technical perspective, we look this like I like what you're playing into. If we look at it from a tech perspective, it's like we have to go with what we know, right? What projects are out there? At least what can settle this? In the United States, we have Zelle. Zelle's a way, but it's not instant settlement. It's just an agreement between the banks. They're basically trying to stop the things like PayPal and other things. They want to keep it inside the banking system rather than have the external fees go elsewhere, right? So, and even though it doesn't cost anything from person to person, they do make money on the business side of it, but that's not real time. So let's look at what's out there, right? So we have. We'll get back to Ripple, but we have Stellar Lumens, right? That could certainly be used. Now, when Stellar first started and broke away from Ripple, you remember that Jed McCaleb, the main, at least from what we heard was public, the main sort of clash he had was he wanted to bring, instead of institutional, he wanted to be more retail. He wanted to bring more consumer friendly. And then you see that kind of doubling back. He was at a conference recently and he said, no, they want to be the basis for the CBDC. It's like, wait a minute, that's going back to institution. But originally their idea was to be retail. So that certainly exists. There's Hedera Hashgraph, which is another project, which certainly has the potential, even though they're small, but they're doing some really good things in the sector as well. And then, of course, when you think about who's had the most time in the space, which you look at Ripple and XRP, right? So you look at what they've done and you bring up a great point as far as them working with the regulators early on. And that was the exact opposite. It's almost like they sat down and looked at Bitcoin and said, Bitcoin's awesome, it's great, but here are the problems, let's fix it. And the transactional issues, the instead of being anti-bank and anti-government, they said like, hey, no, that's a great concept, but you know what, that's not going to change overnight or maybe ever. So I think that was one of the first initial things. And like you said, with Greg Kidd, when he was referring back to some of the early work they did with the regulators, you go, hey, they've been in this for a long time. They've been at this for a long time. And what's the one thing we hear publicly we've heard David Schwartz touch on it, but mostly Brad Garlinghouse talking about, guys, where China's making leaps. China's going ahead. China's moving forward. And the reason he brings it back to China is because there's all this other stuff. There's these conflicts at the moment. And he's like, look, you guys are looking over here, but right over here is the big problem because they're going to one-up us in the tech sector. They're going to one-up and then move ahead. And he's been yelling and screaming. I remember they took out that full-page ad. I think it was the Wall Street Journal.
Don't paint us with a broad brush.
What's that?
Don't paint the whole industry with a broad brush because we're different.
Right.
and they're different. And it was brilliant because everybody has, even the regulators or even the people that are making the decisions, they're still coming at this whole thing from a like, oh, Bitcoin is bad and you're trying to avoid taxes and everything else. And I actually dropped another video on the other channel where I talked exactly that the fiat currency till the end of time, end of crypto, will probably have more stigma and nefarious ties to it than you'll ever get with cryptocurrency. Why? Because cryptocurrency is trackable. You can't track payments that are made in cash. You can load up pallets of cash and fly it into some country, and guess what? No one knows what happens to it after that. Blockchain, hey, we can track stuff.
Trust me, I have personally helped unload tractor trailer flatbed trucks with multi-billions of dollars of cash in foreign countries.
So, interesting. Yeah. And what happened to it after that, Mark?
I don't know.
Nobody knows.
Nobody knows.
It's untraceable. You don't know what happens to it, right?
I mean, that's the point. And that's not the case with something that's on a distributed immutable ledger. So government's got to love it. Law enforcement's got to love it. So yeah, Chip, I think you're absolutely right.
It's got KYC, AML baked into it, like we've kind of discussed before. Hey, I want to transition a little bit because I thought some other news dropped this week.
Well, before that, Chip, I just want to comment on that. I think it's important, from the perspective that governments, do act in certain ways where they want to feed the system, that they don't want it to be traceable. I mean, there's a lot of political plays to where money is moved around, like you said, unloading fiat currency, the billions of dollars that were funneled over to Iran in cash, as an example. And there's all these different mechanisms. At the same time, sometimes you need fiat currency in the hands of the people in order to boost up their economy. So even just doing it through a digital mechanism isn't going to work. You need that influx of cash, however it moves within that community. For good or bad, but I think it's another interesting point to bring up, on Bitcoin, XRP, XLM, Ethereum, Litecoin. I don't know, but let's say if we just looked at those four, it's interesting the dynamics of it. So Bitcoin, coming into play in 2010, potentially. I'm not saying this is the case, but it's just interesting in this line of conversation as a government test bed, to see if something like that could even function and work. And you need it as a larger scale project. You can't test it in an incubator. You can't test it in the lab. You need to roll it out and let's see what happens to it. So you push whatever narrative you want behind it. Now, all of a sudden you have computers all over the world that are generating and mining. You're like, holy crap, it works. However, here's the downside, but now we got it in the hands of all these people. To me, that makes the most rational sense. You roll it out, you create a narrative, now it's being utilized. And the reason why you can look at that is now you have all these projects stacked up behind it that were very in close proximity to that project. So XRP, I think, is a perfect example with Ripple, almost right on the heels of Bitcoin.
Yeah.
And so you see what they're doing, focus on the institution, changing the banking structure. Making things faster and like we were just talking about. Then you have XLM that deviates off because XLM was meant to be a retail product. XRP wasn't meant to be a retail product. XRP was meant to be a financial institution project. That's why Ripple is using the XRP token as the first primary use case of building what their objective was. But even on their ledger was all based on institution movement. Whether you use XRP or not, that was the purpose of the XRP ledger, right? Yeah. XLM is a deviation to handle smaller volume going out. And again, the use case, the test case, go to the unbanked. Can we even roll it out to people who have never used it before? Can we get people starting trading, using? Is it functional? And then you look at the aspect of can XLM then be in the retail mechanism for those central bank digital currencies that might want to build on blockchain. But now we're seeing a complete deviation from that. Like with China, they're building a centralized digital platform that has nothing to do with blockchain. It's 100% controlled and, monitored by the Chinese government, as was the Petro in Venezuela. But then you go to the next layer, and I'm not saying this was involved or not, but it was something that was critically necessary at the time. The one thing that we know in the United States is that when you throw out a project as an overall, because people in the United States and globally, but let's look at the US, are extremely, extremely innovative.
Yes.
So if you put a block here, people are going to figure out the mechanism to work with that block and get around the block to do what needs to be done. That's the innovative aspect of what we've always done in the United States. So you throw out the Bitcoin, and now people say, wow, that's pretty impressive. Now, how can we build in this framework? What's missing? Ethereum, smart contracts. Smart contracts were a necessary component that, in order to further the transaction, especially in business, especially in banking. So now all of a sudden, smart contracts come into play. All these other projects, just develop because, but if you look at our core foundation of product, it almost seems, too good to be, not planned, right? It just, the orchestration of all of it and the development, as we look back, you always have to look back and now look forward. I could be completely off base, that the Bitcoin was meant to be, get away from the banking system. But if you want to, as a government, you want something to go rapidly, what are you going to say? Hey, this is what's going to help you get away from banks, get away from the government. All of a sudden you get all these computer guys jump into it. Holy crap, that's the most amazing thing ever. And boom, it explodes. Yeah. I don't know. I just thought that was an important kind of cap to what we're talking about before switching topics. But I'd love to get both of you guys' feedback on that.
Well, I think you're right in all of that. Recently, in the last couple of weeks, there have also been a couple of statements by prominent folks in the space talking about how interesting it is, air quotes on the interesting, that the US government has given regulatory clarity to 2 crypto projects, Ethereum and Bitcoin, both of which tend to be controlled, at least from a hash power perspective, within mining pools in China. And there's some movement to bring some of that back to the US or into the US, like the big facility that's being developed in Texas and all that. But the reality is, right now, China still has a pretty heavy hand in that. And isn't it interesting, and how unfair it might be, that the 2 that China has a big hand in are the 2 that have been given by the US government that advantage by having that regulatory clarity. So I can't see that standing. So yeah, I think something's got to give, and that might actually just be a way to start to separate out XRP from Ethereum and Ethereum-based projects, and from Bitcoin as a whole. Chip, what do you think?
Do you think maybe they didn't see that progression? I mean, you roll out the Bitcoin, did they anticipate that China would be the epicenter? Or maybe they never anticipated that was just kind of a side effect, and now it's there. No, but it was a test bed anyways. Now you got to move on.
I think that's what it was. And then, and so now people are, I think Giancarlo might have pointed it out that, isn't it ironic, to quote Alanis Morissette, isn't it ironic that we now have clarity about 2 that are largely controlled by one of our competitors, or if not adversaries. So that to me starts to pry open the door for that kind of clarity for the rest of the ecosystem, in particular for Ripple and XRP. The other thing is that what they're doing is not just creating one solution to one problem. From a Ripple perspective, they're creating an ecosystem. And so I don't know if you've ever read the book, The Structure of Scientific Revolutions. But it basically looks at how we know things from a science perspective throughout human history. And the gist of it is, there's a paradigm that everybody buys into, and the scientists first start solving the biggest problems within that paradigm. And then as they run out of big problems, they go to increasingly smaller problems. The longer a paradigm is the dominant one in that particular science or that field of learning, the problems get more and more esoteric and narrow. And so that continues until somebody has a big aha moment. Aha, the Earth's not flat. Aha, the Earth's not the center of the universe. These big aha moments, in which case the paradigm shifts and the scientific community has to start back with another set of big questions. And so the learning goes up in this this sawtooth. It's not a straight line in knowledge. And every time we have a paradigm shift, we drop back down to not as far down as we were before we started the last shift, but we recognize that there are some things we were wrong about, and so we start to rebuild the knowledge base. If there's a strong parallel between that and the value of this new economic environment that is crypto based. And so it's not going to be a straight line in terms of if you equate value in this new crypto economy with knowledge in the scientific community, neither one go up in a straight line, but they both grow, even though you have these little sawtooth moments. And so I think what Ripple has done is they've created a new paradigm for the financial world. How money works, what money is, how we utilize it, how governments control it, how it flows, how it's settled, how it's regulated, all of that. And so it takes a while to get even the big problems solved. Once you do that, then you start to have this adoption and people start pouring into the space and solving these smaller problems. So going back to this notion of, yeah, this is a great thing, but we're also going to need smart contracts for it to work really well. Okay, well, a lot of people are attacking that. Codius gets after that, Cardano gets after that, and there are others. So if you create the ecosystem, then enlightened self-interest among the actors in that system will mean that people will recognize a problem. They'll see it as an opportunity. They'll attack that problem and come up with a solution that they can take to market and make money on. And that's exactly what we're seeing. And I think that's the genius of Ripple's approach, is they're working with government to identify and help solve some of the biggest, thorniest problems that government faces, and thereby creating this new ecosystem that allows all these other smart, motivated, profit-driven players to come in and solve additional problems, which, because of the network effect, tremendously add to the value of the overall ecosystem. So that's the main reason I'm so excited about this, is it's not a one and done. It's a global paradigm shift that we have a front row seat to watch. And it's fascinating. It's absolutely fascinating to see how all this plays out. And if you're invested in it, it might be pretty lucrative on top of that.
It's a great time to be alive right now. That's very well said. And speaking of genius, I thought it was genius how you were able to slip in an Alanis Morissette quote in there about a song. That was good, because I always like to throw some musical bits in there. I like that. I was like, by the way, that song, it's like, isn't it ironic? No, those aren't ironic things that are happening. They're not ironic, but it's just just mishaps or coincidences, not really, form the basis of the word. But, it's interesting too, the Faster Payments Task Force, the Faster Payments Council, we have Craig DeWitt now sitting on that. He announced back in May. And isn't it funny that Ripple's always had a seat at that table? Isn't it funny that they've always been a driving force? There's always been somebody kind of flipping in and out of that seat going back years now. So when you look at some of the other players that are on there, it's like, okay, we're not talking about coincidence. We're just stating what has happened. That's what's happened. And if they're talking about faster payments and they have a seat at that table, I think that's pretty fascinating. I wanted to touch on this one other subject, which is Hester Pierce was confirmed for her second term. It's going to go through 2025. And, everyone calls her crypto mom. I'm still waiting for the crypto part to kick in, because, she did present this interesting sort of a proposal where she would, it was a safe harbor for digital tokens, where you would get this 3-year sort of grace period. You could actually build a decentralized network without any kind of fear of like the SEC coming after you, but you had 3 years to go ahead and execute. So, having Hester Pierce like confirmed for this other one, like that's interesting too, because I think it was maybe earlier this year where she floated this the safe harbor approach. And, maybe there are no coincidences. Maybe this is floated out there, but again, without any action on it, it's just a great idea. Like a buddy of mine used to always say, everything's I just lost him not too long ago, about 2 weeks ago, passed away. But he used to always say, everything's a great idea until somebody has to do something. You know, it's like, yeah, that's awesome. That's great. Yeah, who's going to do that? Oh, geez, look at the time. I got to, you know, I mean, we see this all the time in business. Everyone's at a meeting and everyone has a great idea. It's like, yeah, wouldn't it be cool if, and wouldn't it be great if, and then everyone's like checking their notes and on their computer, and nobody's like raising the hand to volunteer for that project. So we have these great ideas, Jeff, but what actually happens and with the SEC, you know, Crypto Mom going into her second term, what comes out of this, really?
You know, I think it's an interesting point because, you know, everything that we're talking about, you know, the other idea here is that how many people have we seen from Ripple that have now moved into different positions of government, you know, that have to do with the financial space. I think we've seen a number of people kind of move, and I think that, you know, to that point, you know, again, the development you brought up, you know, Ripple has always had an interesting seat, you know, in all of these conversations. Been around since 2012. You know, how much, you know, before that were they actively involved in these different areas? Where did David Schwartz come from? You know, what was his involvement with the government, whether it was as a contractor or not? You know, what are some of the things that he was working on? And you start pulling all these pieces together. I think it's an interesting dynamic. And Mark, you brought up something I thought was really interesting. You know, Ripple XRP. You know, and you look at a new paradigm for the financial world. But that's what we're seeing, right? It's a new paradigm is being set for this financial world, and here's all the players. But here's one, you know, part that I try to look at it. You have, you know, all these different players getting involved. What does it mean for the crypto space? You know, where is the development going to come from? How much of these crypto assets or these digital assets were really meant to be in the hands of the users? Which ones were meant to be exchange currencies for day-to-day transaction? Which were really meant to be the backbones of the day-to-day transactions? That's what, you know, I struggle with that, you know, and I've kind of brought this up a couple times before, you know, and we were talking about a little bit today, that I always saw, you know, again, Ripple as an organization and even XRP as the currency to be more of an institutional currency, not meant to be in the hands of retail use. You know, it's not meant to do the day-to-day transact. The platform can be, but, you know, I don't know. I kind of struggle with that idea because we're seeing things where XRP can easily be transacted, but if it can easily be transacted or traded in a retail framework, that can upset the balance of what the financial institutions need in order to facilitate all the banks' movement of currency as a solution, but maybe not. But to the same point where like Bitcoin now ending up in the hands of and you know, kind of dominated by within China because of the mining system, not such a great idea.
Yeah.
I don't know. There's all these little elements that are struggles, but you also brought up something else that I thought was really important, which is, you know, Ripple and XRP could be a component of everything that's going on within the system, but it might not be the end all be all because you have to plug in other areas and you don't want one party having dominant control either. You have to have multiple mechanisms that get plugged together that can then facilitate, you know, this new paradigm. Right. I mean,
Oh yeah,
that's kind
well,
of,
we know who's going to maintain control. It's who already has control. The government, the U.S. government, or any national government is not going to voluntarily give up control, not of their fiat currency, not of their political power, not of their position, none of that. It's not in their self-interest. So if everybody is if you go into this thinking everybody's a rational actor and is going to act rationally based on their own perceived self-interest, don't expect the U.S. government to cede control. They're not going to give it up to Bitcoin. They're not going to give it up to XRP or Ripple. They're not going to give it up to anybody. Nor is the U.S. government going to voluntarily, I think, give up its position as having control of the de facto world reserve currency. That doesn't mean they won't lose some of the power. Some of that might be inevitable. But I don't think they're going to voluntarily go, okay, we got a new idea. Let's throw it over to Ripple or XRP and we'll let Ripple control it. And we're done for the day. They're not going to do that, right? Nobody ever is going to do that.
Well, they did that with the Federal Reserve. If you remember
Well,
back in the early 1900s, they said like, "Hey, man."
but yeah, but that was not. I think that was an inside job.
It was an inside job. Yeah,
Yeah,
there's a lot.
totally,
There's a lot
totally.
of
The creature from Jekyll Island, and
yeah.
yeah,
I mean that's like I still think one of the most fascinating stories
it's amazing.
to this
Um,
day. I mean,
so history can be instructive for us. So if we go back and look at, there are really strong parallels with what's happening today and what was happening in the late 1920s and early 1930s in this country. You had the Roaring Twenties, the stock market's going crazy. You've got industry is growing. There's building going on all over the place. There's technological developments. And the markets are going up and up and up. Interest rates were super low. Well, guess what? We're close to zero, in some countries below zero now. The stock market is setting all-time highs. Just check the Dow or the S&P 500, and it looks super healthy. I don't think it is, but it looks good on paper if you just look at the chart. Strong parallels, but the party eventually ends, and the more propped up the system is, whether it's stock values, for example, then the harder the crash when it happens. So after 1929, when the stock market crashed, the government sort of flopped around looking for solutions to keep, the entire economy from completely self-destructing. And so they would come up with stimulus plans. Sound familiar? They would come up with ways to keep people in their homes and keep food on the table. Sound familiar? And then they came up with this notion that, you know what, we need to go to the gold standard. And so by executive order, the president made it illegal to own gold bullion. And they defined that not just by like literal bullion, but owning gold over a certain amount, a certain weight. So you could keep your wedding rings and your jewelry, but all the other coins and things like that you had to turn in because it would be illegal. And they used a carrot and stick approach. And so the carrot was, we're going to give you way above market price for your gold if you sell it back, when you sell it back to us. And the stick is, we're also going to make hanging on to it illegal. So of course, the majority of people went and turned in their gold, which allowed the government to boost its stockpiles and back the U.S. fiat currency with a gold reserve, which, as you know, lasted until Nixon took us off of it in, I think, 1971. So, people are worried about, okay, well, if we move to this crypto-backed or crypto-connected or crypto-pegged thing that XRP is part of, are they going to come take our XRP? Because it's, Jeff, as you said, it's meant for institutional use, not for retail use. And I think some people are really nervous about that. I'm not so nervous about it. I think they would probably use market forces and make it in people's enlightened self-interest. So, for example, people who are buying in right now are, paying 29, 30 cents a piece for XRP. If the government offers you $1 or $5 or $10, most people are out of here. They'll take the money and run. If there are other kinds of incentives to cash out, then we will give up what we have. Most people will give up what they have and they'll take the money. Whether a small retail investors do that or not, probably really doesn't matter, because when the price goes up enough, we'll get out of it. But even if we didn't, we hold so little compared to the total supply that it doesn't really matter. And that over time, if it's adopted by institutions, if it's adopted by governments, the price will go up and stay up. And at some point, we will mostly cash out and they'll be rid of us without having to do anything draconian. Right. So I think it's a lot of noise about an issue that doesn't really exist and isn't likely to exist. And I think when we get out of it individually, we'll do that because it's our own choice, because it's in our financial interest to take the money and run. So the notion that one was designed for institutional use and one was designed for retail use, and they're going to come take from us what might have been designed for institutional use. I'm not convinced of that. I don't think that's a real threat.
Yeah, but you also see too that with Forte, the 100 million to the gaming and really kind of just developing around blockchain, which I love the idea. They're not saying you have to develop in this certain way. They're not putting any sort of strict standards around it. But I do see that even though it was institutional, I do think there's going to be a lot of fintech startups that will go ahead, and Jeff brought this up earlier, is like, hey, do really users care? I mean, we'll know what's XRP happening in the background, but it's like when you start your car, do you know how a combustible engine works? Nobody cares.
Yep.
They have a mechanic they can take it to if they need to. And I think one of the things that's coming up with, I think one of the biggest problems that I saw with Main Street adoption was the whole custody issue. This is a nightmare. The Pay ID certainly moving from point A to point B is going to make it that much easier, but you can still get a letter off, and maybe somebody, there's always that potential. But the custody issue is like, if you want people coming into this and you want cold wallets, I think most people would prefer to custody at a bank. They would feel more, because you don't have to teach them anything new. It's like, okay, I've got my fiat currency there, I've got my stocks and whatever with this brokerage, and I have, or maybe the same bank, and now it just makes perfect sense that they now have their crypto custody, right? And it really is the keys. I mean, having those keys locked up and having some multi-sig sort of a system set up that will further advance the whole idea of custody and security. And then what we haven't heard anything about is the next step the FDIC stepping in, because they'll insure a U.S. bank account up to $250,000, and is that next? Is that FDIC steps in and says, okay, crypto will be insured up to whatever value amount, because people have to have peace of mind.
Yeah.
They can't know. They read enough horror stories. I covered something about where a guy lost 300,000 in crypto, and he was able to he went through crazy lengths to try to figure out how to get it back. As I dropped that video in the other channel. These stories, we hear so many of them. Someone was goofing around in 2012 or 13, and some friend told them to buy some Bitcoin. They did. They threw the laptop out, or they still don't know where the hard drive is. They lost their key. And now they're sitting on, a $300,000, $400,000, the potential. So when you start hearing these things, I think the custody, and I agree with you, Mark, this is probably one of the biggest things to drop this year, is the banks being able to custody crypto sets the framework. Now you take the hard part out of it. Now you've allowed banks to offer a way to make money. You've offered brokerages a way to make money. Now they can go ahead and say, okay, we'll charge you $9.95 to store your crypto, and we'll charge you. Now you've found an alternate method for these banks to have these alternate revenue streams. You have people now that they're going to be able to responsible for selling it to different people.
Well, think about so we don't hear that much about PolySign, because I think they intentionally keep it a little quiet. But if you think about what they offer to the institutions, to the banks, for example, why would you think that they wouldn't offer a white label solution to all the big banks to provide custody? And so now with the OCC proclamation that banks can in fact hold and custody, they can, if that's done through a third party like PolySign, who cares? And as a customer, I certainly don't care. What I want is, as you said, the assurance to know that my assets are safe. If it's my money in the bank, I want to know it's safe. I don't want to know what kind of vault they keep it in or what kind of encryption they have on their computer systems. I don't care. I'm perfectly happy, thinking the TV is magic, as long as it works, right? The computer is magic. The fact that I can walk around with a phone and I can pay with that, and I don't have to have a credit card, and I don't have to have a checkbook, and I don't have to have all that stuff. That's all I care about, ease of use. So to the extent that they can remove those points of friction to make it easy for customers on a retail level to come in and use it, and they do that by making it easy for the institutions to offer custody and buying and selling and transmission remittance services. To the extent that they can clear the way for that kind of innovation, that's when everybody starts flooding in. And it happens Most of it is behind the scenes, under the hood for most people. They don't know what's happening. Like you guys brought up Zelle earlier. I don't know that there's any national bank in the U.S. right now that doesn't use Zelle. All the ones that I have accounts at use Zelle. I don't know exactly how it works, how it's different than ACH or another system for moving money between, or IOUs between banks, and I don't care. And so when there's an improvement to it that allows it to happen faster, cheaper, more reliably, I'm for it. You know, because it removes friction out of my life. It just makes things easier. And so that's what they're going to be able to sell. That's what the banks will be able to sell their customers. The other thing is, and this is another, for me, another one of those key points that I'm looking for, is when one of the big national banks rolls out this service where they're touting that instant payment, 100% protection, FDIC or whoever, government insurance, all of their competitors are going to have to jump on board, because their competitors are going to go, wait a minute, we're going to lose market share if we don't match this. We might not be able to beat it, but we have to at least match it. And so, like, if you go back to Ripple's approach when they were, is it Western Union or MoneyGram? Well, Western Union's the big dog. But if you can't get them right off the bat, then you go with the number two to put some pressure on number one. You get number two starting to use it. And now number one feels like at some point they're going to start to lose market share, and they have to come to the party as well. So I think the same thing's going to happen with the big national banks. And then that will then filter its way down to the banks that are the smaller regional or local banks that are their customers. And then you end up with essentially everybody in the financial space using this system. They might tell you about it. They probably won't. It's probably running behind the scenes. Either way, as a XRP investor or holder, doesn't matter as long as it's being used and used in a big way. I don't care if they talk about it or not. I just want everybody to use it, because that's going to drive up demand, which will drive up value.
Boom. Yeah, those are solid points. I think it's amazing because we have to consider Main Street. It's not just about the early investors, early adopters. It has to be about mainstream. And imagine the first guys to get on, to the internet, right? Anything online before the internet was still, there was online, but people had to have that. They took their phone and they plugged it into the modem, and they had the codes and all this stuff, and it was super complex, right? So the average person there, it was expensive, it was difficult, it wasn't practical. But people did it, and people bought computers for their homes back in the 80s, and they were logging in and doing all sorts of stuff. Didn't get Main Street adoption. And if we had to use that kind of protocol now, we still wouldn't have Main Street adoption. Nobody would do it, right? So they simplified the process. Then they simplified it even further, to speed up the transition with companies like Akamai, and all of those made it functional. So even though in the early 90s we had the internet, still wasn't functional. It was too slow, didn't work, it wasn't going to be practical. We wouldn't be doing this if that didn't happen. So it's the same thing with this space, where the early adopters, building the technology, investing in it, mining it, storing digital asset on a ledger. That's great for now because we're all having fun with it. Main Street adoption, nobody in their right mind is going to get a ledger and store their keys and try to figure out if my keys are on my hard drive. All those horror stories it's not reality in the real world for everyday use. It just doesn't exist. As much as we want to have personal reliance on where your money is, it doesn't. You need the banks. We already proved it years ago, years and years ago, that you couldn't store all of your coins in a safe. You can't bury them in the ground. You can't put them in a safe. That's why, the invent of banking, how many, hundreds, if not, thousands of years ago, they had a banking system, orchestrated to help the Main Street people move their money around. That's the necessary element of all of this. So like you said, it's going to be the same thing within the digital asset space. We need the banks, we need the custody, we need the FDIC, we need the security. Doesn't matter what the technology is that makes it all happen. How does it happen? I don't know. I go to my ATM and I get money. That's what I know.
That's all we
I
care.
don't know.
That's all we care about. When
That's
cars and motorcycles and the internal combustion engine first developed in the early part of the last century, you had to be a mechanic to be able to drive a car because it was going to break down
Right.
and you had to fix it. When personal computers first came out, you had to be a bit of a nerd and a geek to be able to swap out components and do some of your own programming and all that to make it work. You didn't get mass adoption until you took those friction points out, and people didn't have to be a mechanic to drive a car or a motorcycle. They didn't have to be a computer science major to operate a PC. And the same thing's going to happen. So I think things like Ledger being in the business of these, little USB hardware devices, I think that's going to go away, and Ledger will be in the business of institutional custody solutions, and that's where they'll make their money. And so, in terms of taking friction out of the system, so that you get everyday people going, oh, I know how to do this. I've already got my bank app on my phone. I can already pay, deposit checks, all that without any contact with a merchant, without putting anything in the mailbox. I do it instantly online and for free. My money shows up instantly. My payments happen instantly. It will get integrated into that kind of platform, so that it's just part of how we do business. We don't even think about it. We don't know how it works on the back end. We don't care. And that's where you get sort of the mom and pop adoption, where I was in the store the other day, and lady in line in front of me, at the end of her big grocery haul, pulls out her checkbook. I'm like, oh, my popsicles are melting. Let me get out of here. Stop writing checks. So,
you still see that every once in a while.
Yeah,
and then what I like about it too is, you ever watch these people that sign like a receipt? I mean, do you think there's an official checker? I mean, I usually put a big X on there, and then people laugh because nobody checks it. Nobody cares. It's like a formality you have to go through. And they're writing the most cursive handwriting. It's like, like the president signing an executive order, and I'm like,
I'm right-handed and I write mine with my left hand just because that's the hand that's free and it doesn't have to be legible. It means nothing.
Well, even on the machine, on the machine at the supermarket.
I'll do it with my finger with the other hand.
Exactly. I was at one. I was checking out, and I was trying to get some stuff done. So the cashier just put a line through the thing so he could check me out.
Don't even make me touch it. I don't want to touch it even.
No, exactly. I know. They're like, here you go. I'm like, we just went through all this COVID stuff here, and now you want me, you want me to touch this thing over here?
Anything to you? Just let me hold the phone up to it, right? I'll just beam you the money. Nobody has to touch anybody.
Right? Yeah. Where's my QR code?
That's exactly. Right. Well, that's China, right?
Exactly. Yeah. And I got a
facial recognition,
retina scan.
I think the biggest shocker for me is that when you see this new institution coming, when you see this next asset class coming out, and you see like people like Google and Apple, it's like, what are they waiting for? It's like, why aren't they acquiring some of these? Why aren't they getting into the business? And I think, it comes back to this regulatory clarity. I think that once this stuff happens, you're going to see big moves. Google and Apple both have a lot of money sitting there. You see that Microsoft is now looking not only just to buy the U.S. Operations of TikTok, but the global operations. They're trying to buy the whole shebang, right?
They need to. Yep.
That's probably what they're going to need to do, is acquire the whole thing. But I look at like with Apple Pay, it was so easy. This is how my 16-year-old daughter understood it when I said, she was explaining. She goes, XRP to me is like, it's like Apple Pay. You just click it and then it shows up on someone's phone, and and then she just holds it up to a machine and boom, there it goes. So it's never touching anything. It comes as a text. She gets it. The Apple Pay, the whole idea of that is like, and the same with Google Pay. It's the same thing. It's like the concepts are there, right? The payment rails are there. The payment systems are there. And you think that they're sitting on the sidelines right now waiting to either make a big acquisition, make a big splash in a huge way where there might be some consolidation, but I don't see them having, introducing Google Pay, Apple Pay, not getting into the crypto, the digital asset game. It just might come down to regulatory clarity, but I think that's on the horizon. But
I'm going to go out on a limb and make a prediction. You'll never hear me make a price prediction on anything because
come on, Mark,
what
give
do
us
I know?
something.
I don't know anything, right? So year and a half, 2 years ago, I wrote an article where I thought, why XRP was designed a certain way to accommodate a certain level of value per coin. Never made a price prediction. I mean, I still think it was designed for $10,000, but I'll never make a price prediction that it would go there or 1,000 or 100 or anywhere else. But I'll go out on a limb and make a prediction. I would be really surprised if we did not see some kind of fundamental inclusion of a major platform like pick Uphold, for example, that's already making sort of huge strides in terms of incorporating a huge variety of fiat currencies, reserve-backed metals, partnering with Link2 to do fractionalized pre-IPO equities, and a wide variety of cryptocurrencies that you can all pay from any of those with a debit card. I mean, it blew my mind a year ago, back before we went to this pandemic mode where we're working from home, when I used my Uphold debit card to buy lunch with gold. I was like, oh, okay, that's the future. I'm sold. And I just wanted to see if it would work, right? So I just went into the app and said, I want to pay with gold. I swiped my card in the reader, and it's like, boom, they got their, $10, and I got my lunch, and $10 worth of gold debited out of my account.
And you were eating gold.
But that's interesting, Mark. I like that idea.
Amusingly, but
that's interesting, right? Because that allows you then to keep your money in what you want to keep it in. So if you decide that your account's in gold, then it's in gold. If it's in euro, it's in euro. Wherever you feel that you get the most stability, it allows you some control over where you hold. Because if you're holding your US dollar in your checking account, it doesn't move, and you're getting 0.00%, interest. And then now you put it in gold, gold's up and down a little bit. Maybe you're just hedging because it's going up. Maybe that's where you want to keep it. Maybe that's what, is good for you.
Right. Well,
and you want to be able to spend it that way.
That was the lesson for me was, so that what I spent on lunch that day was, while it was in my account, it was acting like gold. I could move it like cryptocurrency, and I could spend it like dollars. All behind the scenes.
That's amazing.
Just based on a debit card. That's the future, right? So
that's
here's
amazing.
my prediction. I would be really surprised if we don't see a platform like Uphold get incorporated into a platform like Apple Pay pretty soon, because I think the opportunity for market grab between those big players, Google Pay, Apple Pay, all the rest, including PayPal and others, is the opportunity is that window is opening, and that there will be a land grab. And so I think one will come out, and the rest will rush out with competing offers. So if we didn't see something like that happening in the next few months, I will be really shocked.
What about, you have Libra. So I think Libra is making a major play, Facebook, where they have global adoption, whereas maybe Apple Pay and Google Pay don't have the same global footprint as Facebook does, as WhatsApp does, as Libra will. Whether you like it or not, doesn't matter, right? It's just a matter of who's going to have that first play advantage. PayPal is a big player in the space, so I think you're right. Each one of them know exactly what's going on. They're all dabbling. They're figuring things out. I don't know the relevancy of an Apple Pay or a Google Pay or whatever their platform is as so much as them being an authenticator to allow the ease of processing. I don't know. I could be wrong, more so than like a PayPal.
Yeah, they solved that last mile issue, right? So we're all walking around, the majority of us are walking around with an Apple device or a Samsung device in our pocket at any given moment. Samsung's moving into this space as well. So it is the natural extension or evolution for those those providers to offer that kind of payment service. It's not in their best interest not to do it. Since they're always competing with each other, so at least in the Western world, in the developed world, in terms of mobile devices, there's already 100% market saturation. Essentially, everybody who's going to buy a smartphone has a smartphone. In the developing world, it's different, but at least in this environment, it's 100% saturation, which means the only way you can grow your market share is by taking it from your competitor. The only way you can do that is offer the customer a better value proposition, lower price, more utility, more features, something to pry the old device out of their hands and get them to invest in a new one that's your brand.
That's it, guys. And we usually like to keep these to about an hour, but we had such a great conversation going tonight.
Oh, I thought this was 25
so much
minutes.
fun. I mean,
no,
now we're like
at the 25-minute mark.
It looked like we were, and that was like 60 minutes ago. So it's like incredible that this happened. But Mark, really want to thank you for joining us today, man. And really appreciate your insights. Well thought out.
That's great.
And I want to figure out how long it's going to take you to read. How long it took you to read all those books back there behind you. It's. I was just thinking about that. I was like, man, I don't know if that might take me a lifetime to get through those if I was diligent. But
I know those are the ones I wrote.
Those are the ones you wrote. Oh, I was to say, whoa, man, that's a whole other topic. So, I just wanted to thank you for being here. You guys can check out our site at onthechain.io. We have 2 channels. The easiest way to go to onthechain.io. You can check out both channels. This is our live where we do all the live stuff on this one. The other one we do pre-uploaded videos. Jeff and I just dropped 2 videos over on the other channel, so you can check that out. And we'll be developing the website, but you at least it's the easiest way to see what the newest videos are and some of the other things that are going on, learn about the channel. And if you like what you heard here, if you have any ideas about what was said here today, drop some comments down there. We do circle back. We do look at every comment, and we do those comments show up on future live streams. So if you have a really pertinent question, or you wanted to comment on what Mark had said today, go ahead and drop that comment down below. Make sure you smash the likes and the subscribe button and then alert. And we often get to these on future broadcasts.
I'm thinking maybe we should have said all that when we started.
Because nobody's here. Thank you, one fan, for staying. Thank you, one person. Thank you, my favorite one person, for being here. Yeah, you. Thank you. We should have, but you know what? We get so involved with these things, Jeff. I mean, Mark, any closing parting words?
Just thank you, Chip, Jeff. It's been a blast. I'm a big fan of your shows, plural. And I learn so much every time I watch you and listen to you, and it's just a pleasure to be on the show. I appreciate it. Love to come back sometime. So
absolutely,
that's
love
awesome.
to have you back.
I think we're going to make him a permanent fixture. That was a great conversation.
Man, that
hey,
was awesome.
If I get to listen to Malpass do the blessing at the end, and that's worth it.
And now we'll bring on Pastor Malpass to do our
that's right.
to do our closing statement. We ought to just cue that up every time, because I think we might have to ask permission from Malpass so we can cue that up every time. Because
we should ask him, and just bring the audio in. That'd be good.
Just bring in the audio, and then guys, remember to, and then he goes off his things. What is that one? We can't together. We don't have it all. What is? I don't even know. I always get it wrong, but something like that. We need Malpass to come in and
it's
just
awesome
do
though.
There you go.
Do the send off.
Motivational speaker.
Right.
That's it.
And close it up.
That's
Jeff,
right.
anything last to button up here?
I don't know. I was just thinking about Malpass's thing. So that's it. No, this was awesome. Really appreciate everybody that came in, commented during this talk. We're an hour 28 minutes in. We're dangerously close to DNI territory. So I'm really in an uncomfortable zone at this point, but no, this was awesome. Mark, thank you very much for coming on. We definitely look forward to having you back on. I think, this was probably, in my opinion, one of the most in-depth, important conversations that we've had up to this point, especially since we're right on the cusp of seeing some amazing things happening, both from a regional, domestic U.S. economic perspective as well as globally. So we definitely have to have you back on again, because I know in the next month or so, a lot of things are going to transact and happen. So we need to talk through those. But yeah,
fingers
but
crossed.
yeah. So that's what I've got. But I really appreciate it. Thank you for coming on. Thank you everybody else for being here. And I think we can.
One thing, Jeff. One thing. Just hang out here for a couple seconds past the closing here, Mark, and go ahead, Jeff. Take it away.
We're out.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.